I'm David Scranton, and thanks for clicking this video. Today, we're talking about how investing can be simple, but not easy. So we want to bring in our guest, Jon Najarian. He's an options trader. He's also the co-founder of Market Rebellion and the co-author of the book, Follow the Smart Money. Jon, it's always great to have you back on the show. Thank you for being here.
David, thank you. I got to send you a prop. I got to send you one of those books, I guess.
Absolutely, that's right. I hold it up just like this. It'll be perfect.
That's right. That's
So,
right.
so hey, what are a couple of the areas where you think that investing is simple, but not necessarily easy for the average investor?
I think you and I have talked many times about, emotions and how they can cloud your judgment, bullish or bearish sentiment. That fear of missing out, or FOMO. Yep. People see a stock, like for instance, something that might treat COVID, which we know there's a huge demand for those stocks. And they might say, wow, look at that. Moderna or Pfizer is getting great results. And now we're going to order booster shots, which means more revenue for them. I'm going to buy that stock. Chances are Wall Street has probably already been on that train, and you might be buying in with that fear of missing out and causing yourself some undue pain, much like when the market was falling very precipitously last February and March. People were just saying, I just can't look at it anymore. I can't look at it anymore. And instead of saying, well, maybe I just shouldn't look at it anymore for a bit, they instead sold. And when you're doing that, when you've got fear, uncertainty, and doubt, or FUD, taking you out of a market, or that FOMO putting you into a given stock or asset, I think both cause you to buy low and sell high. Yeah. I mean, buy high and sell
low, right?
Which is the opposite, of course, of what anybody wants to do.
That's right. Even last time you were on, about a month and a half ago, we talked a lot about cryptocurrencies, and I think Bitcoin is probably a great example. I don't want to spend a lot of time on it, but how many people followed Bitcoin and then it got up over 50,000 and finally said, I'm going to get in, and they saw it drop back below 30,000, and it's still not quite back to 50. And I know you think it's got the potential to go a lot higher, but isn't that a great example also of FOMO?
Oh, yes. Oh, yes. And as Dan Held, a guy that I've interviewed a few times and, just a great crypto trader, as he has said, if you zoom out, which is always what any long-term holder wants you to do to any asset class, they want you to look and see, okay, but for the year, it's up 58%. For the last 2 years, it's up 1,000%, and so forth and so on. Take it back to when it was minted in 2009, it's up 400,000% or some silly number like that. I'm not saying that Dan is trying to spread that FOMO, that fear of missing out, but an awful lot of people do wait too long, as you and I know, David, to get involved, and then they try to go all in at a level. And again, you and I would say the same thing. Go in little pieces, accumulate, rather than just saying, okay, now's the time. Because none of our timing, mine, yours, none of our timing is going to be that accurate on entry or exit. So instead, putting money in regularly is a much smarter way to go.
Yeah, if our crystal balls were really great, you and I would be having this conversation on a yacht in the Med somewhere. So
we'll do that soon.
Jon, I know you're a market follower in general, but I talk about this all the time, but I'd like for you to speak in your own words, if you don't mind, about why sometimes it's harder for someone who's a value investor to be able to gauge things and to make good, logical, successful decisions, or decisions with successful outcomes. Why it's harder as a value investor than oftentimes it is as a growth or a momentum investor.
Sure. Well, that last word that you used, momentum, that is one of the things that, of course, my brother Pete and I live for, is momentum, because it's a lot easier to see a trend and jump on that trend than it is to say, boy, this stock is getting awfully cheap on the value side. And many of us would call those cyclical stocks, David. Picking a cycle beginning or ending believe it or not, isn't that hard. But the fact that, again, first segment, that we don't want to go all in on those is, I think, one of the big mistakes people make. So if somebody told me right now, David, well, it's going to be cyclicals, it's going to be value stocks over growth, I would say, why? Did the growth stocks stop growing as fast? Was the momentum not there? Right. And clearly, in some cases, that is the case. Netflix, for instance, not growing as fast anymore because of competition like Disney Plus and Hulu, also owned by ABC or Disney. So a lot of these stocks are seeing a slowing in growth. Again, not Disney, but Netflix. And meanwhile, you see a lot of value stocks that you'd like to jump on, but you haven't really seen that turn where the growth stocks will see money flow out of them into those value stocks. And until we see some of that momentum, again, your word, but I agree with it, till we see that slow, David, I don't know that value is going to outperform. It can perform, but it will not outperform growth until enough of the growth stocks stop growing as fast as they are right now.
Right. Yeah, it's been, value stocks had done great toward the end of last year, beginning of this year, and then all of a sudden now it's like a stop-start. You get growth one day, value the next day, and who knows. But the good thing is, being an options expert, if you see a part of the market that's starting to get momentum, you don't have to go in. You can still get some upside in the options market. And only once that upward momentum is confirmed, you actually can, you own the security. And then when you think it might be a little toppish, you can always turn around and protect your downside with options. So, I assume that's part of the reason that you're such a lover of options, because you can do things with options to manage your risk a lot better than you can sometimes holding the actual security.
You're 100% right. And it's about that protection, as you said. It's about when people are buying options, they're telling you the time frame because there's an expiration, and they're telling you a strike price, which is a target that we're trying to achieve or whatever. And I use the VIX a lot. I don't trade the VIX a lot, David, but the VIX is a measure of the S&P 500, of course, and how interested people are in being in or out. The more interested they are in being in, the lower the VIX. The more interested they are or panicked, the higher the VIX. So Pete and I use that all the time to determine, okay, I want to buy when there's blood in the streets, when the VIX is high. That's when I want to be buying stocks and selling calls. When the VIX is low, I want to be getting out of my stocks and buying calls because they're cheap. And if I use that as a gauge, I think options can be a great entry and exit point, among others, fundamental analysis, technical analysis that people might use to determine entry and exit. But again, never all in.
Yeah. And even then, that's one of the examples, I think, just the ability to use options as a tool is one of the areas where investing is truly simple, but not easy. Because with options, of course, you have decay and other factors that you simply don't have when you have typical, you own stocks or you own bonds or the non-derivative securities, correct?
Yeah, you're right. You have to be aware that time, or theta, as they call it in the Greek terms, is something that is usually the enemy of the buyer of the option, and it works for the seller of the option. So again, when volatility is high, I want to be a seller of those fat options. When volatility is cheap, I want to be a buyer.
Yep, I love it. Great advice. Jon Najarian, once again, it's been our pleasure having you back here on The Income Generation. Thank you.
Thank you, David.
And a big thanks to you for watching this interview. For more content each week, subscribe to our YouTube channel.